In this video, we're going to look at a ratio called earnings per share. The formula for calculating earnings per share is earnings per share is equal to net income minus preferred dividends divided by weighted average common shares outstanding. And we'll talk about each of these components as we go through some examples. Earnings per share is a unique calculation because GAAP requires earnings per share calculation to be reported on the financial statements. When you're calculating earnings per share, the numerator is going to be in dollars. So net income is in dollars and the dollar amount of preferred dividends that are paid to preferred shareholders. The denominator is a number of shares. So you have to be aware that we're looking at common stock, and it's not the dollar amount, it is the number of common shares of stock. Earnings per share calculates the year's profits that are available to the owners on a per share basis. So the company is not going to actually distribute these profits, but of the year's earnings, how much of the profits were attributable to owners, and then they calculate it per share basis so that it allows the users to compare earnings of different sized companies. When you're looking at earnings per share, the higher the number, the better. The other thing I want to point out is if you see these slides, they say basic earnings per share. There is another calculation that companies do, which is called diluted earnings per share, but that's beyond the scope of this class. Here's an example of Walmart's financial statements. So they've got the year ended January 31st, and they have 3 months ended January 31st for 2021 and 2022. This is their income statement, and at the bottom here, they list what is earnings per share. So they've done the calculation and they've shown you what is earnings per share. It's at the bottom of the financial statements and they do list it for every year, every quarter. For Walmart, they even have the weighted average common shares outstanding. That is the denominator of the earnings per share calculation, and that is also shown on the face of their financial statements. So how did Walmart perform? Well, for the 12 years ended January 31st, 2022, they made $4.90 of profit or net income per share of common stock. Now they made a profit, and it's a pretty good profit per share, but we can always compare it to another company to see which one's better. Here's Amazon's financial statements. Amazon lists their basic earnings per share at the bottom, and they also reported their earnings per share for 2021. Notice how the format's a little different. So in their financial statements, 2020 is listed first, and then the year ended December 31st, 2021. Their earnings per share is $65.96 per share. If you remember, Walmart was $4 something per share, but Amazon is $65.96 per share. They both did well because they both made the profits, but Amazon did far better for their owners than did Walmart. Now let's go through some examples and learn how to calculate earnings per share. Pause this video and read this question, and then we'll continue. So we're looking at JC Company, and they have given us 2021's net income. They have provided us with the amount of shares outstanding on January 1st of 2021. They have told us that there were some preferred stock outstanding on January 1st, 2021, and that they told you that the Board of Company declared and paid a $75,000 dividend. They want you to calculate JC Company's earnings per share. Before we get going, let's look at the formula. So your formula for calculating earnings per share is earnings per share equals net income minus preferred dividends divided by weighted average common shares outstanding. In this example, I'm not going to explain what weighted average is, but let me explain the term outstanding. When we were looking at stock, I gave you three terms. One was authorized shares, the next one was issued shares, and the third one was outstanding shares. When we are looking at the number of shares authorized, that's the amount of shares the company is allowed to issue to stockholders throughout the life of the company. That's how much they have been approved to issue. That term is called authorized. Issued is when a company issues some of that stock to the shareholders. And then outstanding is how many of the stocks that were issued are still in the hands of the owners. In this example, what they've told you is the number of shares outstanding. So you don't need to worry about any calculations to figure out how much shares are outstanding. We just apply the formula. First, let's look at the numerator. In the numerator, we have net income. Well, net income is already given to us. Net income is 1 million. Next, let's look at preferred dividends. Preferred dividends are discussed in items 3 and items 4. 3 says that company had 5,000 shares of 10% $100 par value preferred stock issued and outstanding. So they had the entire year they had 5,000 shares of preferred stock. And then it says on December 1st, 2021, JC Company's board of directors declared and paid a $75,000 dividend. Now, we first need to figure out how much was the dividend that was paid to the preferred stockholders. The question does not say that they paid a $75,000 dividend to the preferred stockholders. If they did, we could have just plugged that number into the numerator. They just said that they paid a $75,000 dividend. So let's figure out how much of that dividend should go to the preferred stockholders. When you're calculating preferred dividends, your formula is you take your total par value of preferred stock and multiply it by the dividend percentage. The total par value of preferred stock is given in step 3. So they said they had 5,000 shares and each share had a $100 par value. So to calculate the total par value, you multiply 5,000 times $100. And then you multiply by the dividend percentage, which is 10% that's stated in the question. That will give you $50,000 of preferred dividend. So the $75,000 dividend that the company paid will be split with $50,000 going to preferred stockholders and $25,000 going to common stockholders. Now we have all the information we need to calculate earnings per share. So earnings per share is equal to the 1 million net income minus the $50,000 preferred dividend divided by the number of common stock outstanding. Again, this is the number of shares of common stock outstanding. So step 2 tells us the number of shares outstanding is 200,000. So we divide this by 200,000. We get 950 divided by 200,000, giving us an earnings per share of $4.75. The question asked us to calculate JC Company's earnings per share for 2021, and JC Company's earnings per share for 2021 is $4.75 per share. That's it for this video. I will continue 2 more examples in the next video.